I make $2,000 per day trading this stupidly simple scalping strategy. It's so stupidly easy that even a monkey could trade it. Using the strategy, I made and withdrew $18,000 on my live funded FXify prop account all last week. And this week so far, I've made over $28,000 on my Ascend X prop funded account. And I'll be withdrawing that in 2 days from now. In this video, I'm going to show you the 3 easy steps to executing the strategy and making upwards of $2,000 trading only 45 minutes a day. I promise you, if you put in the work and actually test this strategy, focusing on this extremely simple trading edge, you will get funded and you will change your life. Now, this first part is vital to understanding how to frame trades with this strategy. If you don't implement it, you're pretty much taking trades fully in the dark. Yet 99% of traders overlook this part. All right, so here we are on the 4-hour time frame. Essentially, all we're doing is marking out swing structure. So as you can see right here with my previous drawings, you can see that price pushed up, retraced, pushed up, taking out this high. Okay, we only really count a swing structure once we've taken out a high, and the lowest part of that becomes our swing low. If you need more detail on this kind of structure, have a look at my previous video that came out just before this one. I go through it in detail. If we look a bit further back, we can see price pushed up, retraced here, pushed up once again, and continued the pattern. So we've had one break, 2 breaks of structure, okay? This to me signals that we are now bullish, okay? As I've spoken about in previous videos. Now, again, I can still take trades against this trend, but I am favoring longs because the 4-hour is clearly bullish, all right? And that's how I determine that. Our swing structure is bullish. Now, the most important part of this 4-hour time frame is marking out 4-hour support and resistance. Now, how I do that is quite simple. All I'm looking for is the market to retrace. Okay, when the market starts to retrace in any direction against the trend, we can now add in a support zone here. Okay, this would be a resistance / support zone. Okay, and how I draw that is from the body to the wicks. So we've essentially got this body here to the top of that wick. Doesn't need to be extremely precise, okay? This is a framework for us to work within. It's like when you learn to draw and you draw that round face, you draw a circle and you draw that cross in the middle to get the eyes correct, to get the mouth in the right place. This is the same thing. We are creating a framework to trade within. And essentially what we're looking to do is to frame trades within these zones, okay? We want to be trading within these zones, okay? We're waiting for price to break through here and take a trade long. We're not going to be wanting to take shorts into this brick wall of price, okay? We're wanting to take price long if we are down at the bottom of this zone, okay? So that gives us our direction to follow when taking trades on the lower time frames. It also gives us our framework for where we can take higher probability trades, all right, on the lower time frame. Okay, so once we've marked out these support and resistance zones, we can then go down to the lower time frames and start to really dissect the trades that can possibly set up within this. Again, this is our framework for taking safe trades that have room to go, okay? We do not want to be taking trades that are up here that have no room to go and we're heading straight into a brick wall, all right? That is not smart, and that's why we have this framework. Now, onto the meat and potatoes of this strategy. This next step might seem simple, but it's crucial for you to understand how this works so that you can frame trades that are safe to be in. Right, so this was today, okay, on the same framework that I've just drawn out on the 4-hour. This happened today. So essentially, what we were looking to do is, like I explained previously, take advantage of the space that we've been given. We do not want to be taking shorts into this brick wall right here, okay? That is a 4-hour zone. We do not want to be doing that. If we are going to take shorts, we need price to clear this zone first so we can start to take shorts off of structure that's created down here. So the higher probability trade would be longs, because we've now got this structure up here, okay, which is the extremity of the most recent 5-minute structure. And so I'm looking for price to break through this area, come and retest and continue up further. Now, how I draw these zones and determine what zones to use is pretty simple. I'm not going to be taking a zone, any of these zones within this block. Why? Okay, why do I not mark up, for example, this here? Because it's within a range, okay? It's within a range. We want price to clear the range. This here is the edge of the range, and so that is where my breakout would occur, okay? Now, if we look similarly, this here is the bottom of the range, and so this down here would be my support zone that I would need to see broken in order to go short, and I would also additionally want price to clear this 4-hour zone as well. And so once it does that, we can see price retest here and continue lower. Okay, and that's basically what I had forecasted today. We took the trade and essentially it worked out quite well for us today. So once I've drawn out these 5-minute zones that we expect breakouts from, we can look to take trades. And I'm going to go over that in this next section. And now this part is the glue that brings all of these concepts together and turns it into a real strategy that you can trade and make profits consistently with. Okay, so the final piece of the puzzle is pretty simple. We're only looking to take trades within a New York session, which again happens at around about 2:30 p.m. That is in London time. It's around 9:30 a.m. Pacific time and 3:30 p.m. in South African Standard Time, all right, which is where I am at. So essentially, all we're looking to do is take trades in that period. So you can see here the session opened roughly here where this red line is. We had the opening candle print. Now, one of the key features of the strategy is that you cannot take a trade on the first candle print. We must wait for the first 5 minutes to finish. So this candle finished printing. We then had a liquidity grab over here and a liquidity grab over here. We stayed safe on both of these occasions. Why? How? Because we're waiting for a break and closure outside of our zone that we've marked out. Okay, we did not break and close. We swept, okay? We swept and then we chose the direction, okay? The market likes to take liquidity of people that are just buying on the break. We're not buying on the break, we're buying on the retest after a closure outside. So people got totally trashed here, people got totally trashed here on both of their orders, all right? Now, we're also having a look at another factor, which is the 50 SMA. The 50 SMA is simply the simple moving average, all right, which you can just type SMA into indicators and get it, and simply put down 50. You've got the 50 length, close, the source is closed, offset 0, and method is SMA, obviously, okay? That's very important, all right? Very important that you have the 50 SMA, because the 50 SMA also gives me a direction on the 5 minute. I'm only looking to take trades for buys when I'm above the 50 SMA, and I'm looking to take trades below when I am taking sells, okay? It must be in those areas for buys, it must be below for sells, okay? So the other thing with the 50 SMA is it often acts as a point of support and resistance. So for example, we want the 50 SMA to often be a barrier between your area that you've gotten in on and your stop loss, because that is a good place to be. All right, we also want the 50 SMA to be pointing in the direction that you're wanting to take your trade in. So for example, if the 50 SMA is pointing upward, you can take buys. It's a more probable trade in that sense. So it's a nice confluence to have, and I've always traded along with it, even when I was trading ICT concepts. All right, so essentially, we've got our 5 minute zone marked out. We've had the breakout, okay, which occurred about half an hour after the session started. we then know where to get in, okay? Now, how do we know where to get in? We're looking for a rejection of the zone. So this zone, we're not only wanting price, we're not just setting a limit on the zone, okay? No. We're waiting for price to tap the zone, hesitate at the zone, okay, and then reject, okay? And that's exactly what happened in this instance. Price tapped, hesitated, and rejected. But I ended up missing this on stream, okay? We took this trade on stream. We ended up missing this, okay? Price, some people got in over here. Price came up and they got their break-even point, okay? So they hopped into this right here, like so. They got a 1-to-1, and then they got into break-even. They got taken out at break-even. I decided to hop in once we tested once again and had the rejection, okay? And again, the reason we do this is because sometimes price will come down to the zone and just smash straight through. Now, if there's no hesitation and no rejection, there's no trade, because price will just smash straight through. And that saved me so many times. And this is why it's so difficult to backtest this on bar replay, because you cannot see the hesitation in the candle and you cannot see the candle rejecting in real time. Now, I saw the rejection happen, I saw the hesitation happen, and essentially I hopped in once it rejected this zone once again. We hopped back in and I gave a 20 pip stop loss, which is the max stop loss I use for NASDAQ and for US 30. I then put my take profit at 1 to 2 risk reward. So I'm looking at about 40 pips. All right, and then I use this GAN box with the 50% to get a 1-to-1, which again would be, you could also just do this. Okay, and this zone here would be my break-even point. Okay, and then my final take profit is at 1 to 2. We could also have targeted the highs here, but we don't know how long these trades are going to go. So we need to stick to a fixed take profit method because we want our edge to play out in the long term. All right, so price continued. We had price then break through significantly at this point here. We then went break even on the trade. We then hit take profit. This trade ended up going all the way to the zone and smashing through this next 4-hour zone, continuing on. I did hold it on my challenge account, but on my live funded account, I ended up taking profit right here. All right. And again, I documented that all in the Discord, and I took this trade absolutely live in front of everybody, which again is completely free to join with the link in the description below. I've been trading this strategy for a while now, and it's really different to any other strategy that I've ever traded. And the main difference here is that you can't just sit and backtest the strategy. Bar replay does not accurately represent trades with this system. Why? Well, it's simple. You need to see the candlesticks form in real time so that you can see where it reacts to the zones that you've marked out. Bar replay won't show me how aggressively a candle has reacted to a particular zone. Okay, so that's understandable, right? So what do we do about this? How do we test the strategy and become proficient in it? Live testing on a demo account or a very small funded account is the only way to do this. You need to trade the strategy for at least 2 months, collect data, and see it work for you live. You need to take the entries and prove to yourself that the edge works, because it really freaking does. You need to enter with the reactions to these zones, and bar replay simply won't be able to replicate this for you. Now, if you're skeptical at any point, join me on our live Discord streams where you can see me trade this live every single day at New York Stock Exchange Open. It's totally free to join, and you can join a community of like-minded traders. I'll see you in the Discord. Cheers, everyone.